All right, we're live here with Why Invest in Alberta, how to generate sustainable passive income and generate massive returns for you in your portfolio. I'm here with our partner, Amy Francis. Say hi, Amy. Amy is a dual citizen of Alberta and Ontario, so she understands both markets. Amy, tell us about yourself.
I am originally from Ontario. I have been an investor about 15 years, realtor for 12. I stumbled upon opportunity in Alberta about 3 years ago and started investing there. 2.5 years ago, taking some of my investors and family out there to invest as well. Investments and investment opportunities has always been my primary focus in real estate because I could see such great opportunity out there. A year ago, I did get my license and have taken many people out there. Primary focus has been on new developments. So I went and secured a group of new builders. That way it gave us the ability to design portfolios moving forward and secure a lot of properties. So it's a great opportunity that I truly believe in.
Awesome. Thanks so much, Amy. So our mission here at Affluence Real Estate Group, and I'm Sam Abdallah here, is to empower you, our clients, to build generational wealth for your family, to be the ultimate guide and resource through real estate investing, and to help you attain your real estate goals. Also create investment opportunity without the barriers commonly encountered in Ontario market, with better returns, cash on cash returns being 8 to 15%, and up to 42% annual return on investment on your full investment, including mortgage paydown and appreciation. And we'll talk about an example to come. Okay, this is just quick about our Google reviews. We've helped a lot of investors, over 65 five-star Google reviews, secure and grow their portfolio. And this is an example of a couple that we've helped. So what makes investing in Alberta so attractive? So we'll start here with lower purchase prices, monthly cash flow, lower down payment. And this is also based on the demand based on mortgage risk through banks. Now, Amy, can you explain about banks and how they require more in here in Canada, or in Ontario, sorry, than in Alberta?
So what we've run into in southwestern Ontario, making it very difficult for people to expand on their investment portfolio or even get into the market. Not only is the purchase price substantially higher, you can buy 2 or 3 Alberta houses for the price of 1 southwestern Ontario. But because these properties don't tend to cash flow on a monthly basis unless there's too much equity in them, they're equity rich. It's not a position you want investments to be in. But when you consider how much money you can put down to be able to afford the property, just to alleviate the risk, they're looking at 30 to 35% down payment in case the interest rates went up, and because they cost out of pocket, the banks take down the risk by increasing the down payment. In Alberta, you're going to see that all properties are in a cash flow positive monthly basis, and there's less risk. So 20%, as long as your income and your credit is well, 20% is a normal down payment for investors, which is a great opportunity.
That's great. So for people saving in Ontario down payment, it can help them on journeys. It's better, lower price to purchase property, and they'll also gain on the monthly cash flow and appreciation. We'll talk about a specific example as well. So if you're looking to grow your portfolio, can you expand on how it's easier to acquire more properties and help your debt service ratios?
Absolutely. So again, when you look at a debt service ratio, it's your ability to afford. So your income for the year accounts for 100% of the points, and then you're allowed to be approximately 42 or 43 points in debt of your total income that's allowed to go towards debt. Often we are going to see many people, 20 or 30% of that is taken up by their primary home, sometimes more, that it's not leaving a lot of room left over for an investment property. And because you have to contribute out of your monthly income to even hold and sustain the property on a regular basis, it's taking more and more of your debt service ratio. So if 20 points was gone to your primary residence and 20 or 30 points has gone to your rental property, it's kind of wiped you out. You have no more room to invest, so you can't acquire more property. What we're finding in Alberta is because it cash flows so high, it's not taking up the points, because normally an expense, it's hindering your affordability. It's cash flowing so much that it's actually helping you afford more. And if it is taking from your debt service ratio, it might be taking 5 points. When we look at the grand scheme of things, a bank will account for 50 to 70% of your rental income. They will use it towards your affordability. So if you have a property that is cash flowing, generating income at about $3,800 a month. And if we were to assume that the mortgage on that property might be $450,000 plus the property tax included, you might be accounting for about $1,700 a month worth of expenses tied to that property, but your cash flow is going to be coming in at $3,800. So if we split that in half, that's coming out to 18, 19, almost 19, 1750. So there's about $150 difference between your expenses versus half of your rental income. So in that situation, $150 a month is being added to your affordability, and there's no hindrance on your debt service ratio at all. So when we're in a position like that, it actually helps us buy more and leaves room on our threshold. Not only that, acquiring the property is easier, the purchase price is lower, as well as the down payment percentage. So we're able to acquire at a much faster rate.
Awesome. So more room for growth and a market that's very stable as well.
Absolutely.
Okay, we're going to talk about some projects here, Amy.
So this here we are seeing, this is Beaumont. It's a small town just outside of Edmonton. It's townhouses. They're freehold, 3 beds, 2 baths upstairs. But the beauty of this, you walk in the door, there's a foyer with a separate entrance to the basement with a full legal suite. So being able to acquire something like this here in Ontario, it's going to be very expensive. There, you're going to have an upper level unit plus a fully duplex unit, $425 purchase price. So if the upstairs rented, say, $1,500 a month and the basement rented at even $800 a month, truthfully, these numbers are very low. It's going to rent for more than that. You would still be in a cash flow position of over $800 a month. So the cash on cash return on an opportunity like this is absolutely insane and unheard of. If you bought something for $425,000, we're going to say that about $90,000 was a down payment. You have a mortgage of $300,000, and even if we had $320,000, $330,000, that mortgage is going to come in less than $1,200 a month. With 24, how much? We'll say 15 plus 900, we're $2,400 a month. You would be cash flowing almost $1,000 a month, which is insane.
It's incredible. And you mentioned also earlier in the slide, you had a point there about lotteries with builders, how that's a challenge because of the demand in Ontario, how nobody's getting property, not many people, and also bidding wars and multiple offers. Can you just expand on that a little bit, Amy?
Yeah. So one of the issues we run into while trying to design an investment opportunity, investment portfolio with our people, it's one thing to be able to afford to buy in, but to be able to plan forward and truly go expansive and get the full big picture for people to chase their goals, which is motivation. In Ontario, you're going to find on a regular house, not only is it expensive, but you're in bidding war. So even though it's priced at or listed at one price, it's going substantially over market value. You can't guarantee whether you're going to win one of those property bidding wars. So you would want to go into a new construction opportunity. Well, going into new construction, there's not free available, you can't just go in and sign for one. Your name is put on a list, and it's again like a bidding war. It's a draw. So it makes it very difficult to be able to plan forward, as well as unstable prices. One of the things that we are very, very fortunate to have been able to attain in Alberta with the developers that we've decided to work with is various different styles. So we have apartment style condos, we have townhouse style condos, townhouse freeholds with duplexes, semi-detached, some with deep duplexes, multi-residential units, single detached units. We have such a range of product and areas. But not just that, we have closing dates from the immediate 3 months, 6 months, 9 months, 12 months, 18 months, up to 24 months out. We have continuous projects, which makes it easier for people to design and attain their goals. So it's one thing to close something now and to move into something else in 18 months. You're designing your future and you're really taking the control back in your own hands, which makes it a great opportunity to grow forward.
It's incredible.
Yeah.
Keswick.
So Keswick, this is just another example of a different type of product. Again, all of the areas that we have taken on, some of them we are taking the land and deciding what needs to be built there, what type of product, whether it be townhomes, semis, single detached. We like to make sure it's a good area, good access, continuous growth, great rental demand, etc. So this is a single detached home in Keswick. It's just outside of Windermere, great part of the city. Windermere is where we're going to find a lot of the Edmonton Oilers living. So it's highly, highly desired, but also a great family neighborhood. So this is a 3-bedroom, 3-bath upstairs, as well as a 2-bedroom legal suite in the basement. This model can be bought at $635,000, including a fully legal suite in the basement, all appliances included, etc. We do have a smaller version that can be bought slightly below $600,000. You're going to see great rental returns the upper part of this house at $200 or $2,500 a month plus. A basement, we would expect to see $1,400 or $1,500 for a 2-bedroom suite. Even if we said $1,300 and went very low, that's $3,800 a month in rental income before expenses. So this is going to cash flow very, very nicely as well. Luckily, because when we're speaking on behalf of these communities, we're able to speak how many we want and take the whole project, which gives us the leverage or the ability to offer discounted prices onto our clients, which is also key for investors. We want the lowest possible purchase price, greatest outcome, plus full control from A to B.
It's incredible. And we talked about too with an Ontario, someone buys a resale, they have to go through the carry costs, the construction costs, the permits, the waiting, all those extra expenses. And like you said, multiple offers, potentially paying more. This is a great opportunity, a turnkey solution. It's closing later, and all the permits, everything's already done by the builder, fully duplexed.
Absolutely. The other benefit that we run into in Alberta is land transfer tax. This is another upfront cost while purchasing here in Ontario. It comes in at 10,000 plus easily, whereas there it's a different calculation. Often you're going to see that number 500, less than 1,000. It's very, very affordable, less upfront cost, which helps us buy forward as well.
That's incredible. Granville.
So Granville, this is a highly in demand area, quick access to the full city. It's an infill. So this neighborhood is mostly complete. We took a last little pocket and filled it in with some single detached duplex houses. It's got a detached garage, a double detached garage in the back. There's only one of these left actually, plus one without a legal suite, but 525. You're going to get long-term great tenants, great schools in this area, Costco, all amenities nearby. This is a great spot. 3 beds, 3-bath upstairs with a 1-bedroom suite in the basement at $525,000. This is an incredible investment.
So this would improve your debt service ratios, help you, and also you have 2 units that are ready to rent right away.
Absolutely. Yeah. And even in the future resale, you're buying it at a great value that you would be able to sell it off to acquire more or leverage against it. This is a great property.
Awesome. And just so you know as well, we're going to talk about this at the end of the video and the webinar, that a list of updated properties you'll have to text. So we'll let you know you can always get an updated list. This is just for illustration purposes to show you the value and the power of investing in Alberta. Citadel.
So as I was saying, we have different timeframes of stuff being available. Citadel, we have semi-detached homes with a duplex legal suite. This is an area that's continuous growth. It's expanding, great family demand. It's going to always have a need for rentals in this area, which is really good. 3-bed, 3-bath, double car attached garage, and a suite in a basement. So the thing we like about Citadel, it's going to be ready anywhere from 12 to 18 months, potentially a little bit longer. So it's given us this great opportunity to stage completion dates. So anywhere from 467 to 478,000 for a full legal suite in the basement on a semi-detached house. It helps us be able to design forward somebody's investment portfolio.
That's incredible. And you mentioned too that this will allow them to go to bigger projects as they build here, they can continue to move up. So.
Absolutely. So by securing these, we need a foundation of investment. So this is a great thing because it cash flows so much, and it is a community that will continue to increase in value. Mortgage helpers, you're going to attract first-time home buyers, second-time home buyers, and investors when you go to sell this. And then the idea is, even if you buy one, some people just want the titles game where they're going to acquire as many properties as possible and you want the cash flow. Other strategies is you're going to close one, and because it's so far out, you're going to move on to the next and keep moving forward and refreshing your portfolio. It's a good way of unleashing money. And some people just want to acquire many and sustain rental income.
Awesome. Fantastic. Citadel, this is another one. Right?
Yeah, so this is just the other side of
Other
the
side.
same unit. Again, great opportunity. We're going to move into Zinco.
Zinco.
So more semi-detached with legal suite in the basement. This neighborhood is in McConaughey. It's a neighborhood adjacent to Citadel, but this completion date is going to be from August 22 or 2022 to February 2023. So again, it's giving us a little bit earlier.
Mm-hmm.
This is actually going to be, to February 2000.
Yeah, 2023. Yeah, got it.
So it gives us a little bit quicker closing day. So we have some products, not everything is listed on here right now, some that are available now, 3 months, 6 months, 9 months, 12 months, 18 months. So this is a very similar product for somebody to buy in that's looking for a little bit earlier of a closing date. But again, a very good opportunity, close to all amenities, easy access to the Anthony Henday. It's like a ring highway built around the outside of the city. That's a great commute. And we have a few more products in that McConaughey area as well.
Yeah, we'll talk about that. And also, if you'd like to learn more and book your complimentary call with us to get more on these are going pretty fast.
Yeah.
Just text INVEST to 519-574-3532. We're going to have that at the end as well.
So
Oro.
This is just the other side of the Zinco. Again, same thing in McConaughey. This is the same thing. Yeah. The garage suites. So the style of home that we've seen in Granville, it's a single detached, and I said there was a double detached garage in the back. This is also in McConaughey. We're looking at approximately 8 to 13 months out for a completion date. So it's going to be that 3-bedroom, 3-bathroom home, but instead of having a suite in the basement this time, they've actually put a 2-bedroom suite above the garage. So it's great. This garage is actually separated into 2 separate garages. So there's a wall in between separating. One is up to the garage suite and the other one would be to the main house. So again, great Airbnb opportunity on top of the garage, as well as just separate rental. This is for a single detached home, 8 to 13 month completion date and a great buy-in price. You're going to cash flow insane here as well.
Wow. All right, we have an example. This is Keswick. That's right, Keswick. So this is a $600,000 purchase price. We're just going to talk about the main points, and Abe's going to help us out as well here. $600,000 purchase price, 20% down. You have a $480,000 mortgage. We have land transfer tax, a lot less here in Alberta. Inspection, just basic things, legal costs, basic stuff. Go to the next slide here. So total investment about $122,000 or $120,000 as a down payment. So 2,500 ups main level, 1,300 down, correct?
Yep.
Okay, 3,800 gross rents. Here's your annual gross rents. Expenses. We have property tax. We've estimated a little higher, so $5,000 per year. Insurance, $100 a month. Property management. Actually, Amy, you could expand on this here. Usually it's a lot less in Alberta than it is in Ontario. We guessed on the higher side, just be conservative for you. Would you like to expand on that?
So most of the products that we are moving into, some people can request that we went looking in the resale market, but for these newer projects that we're talking of, they're all going to be under warranty by the time that you get them. There is opportunity with property management companies in Alberta where for a one-time flat fee to put a lease in place as opposed to an ongoing monthly membership type of thing for a property management company, it can be $750. They will put a lease in place that includes the marketing, showing of the unit, and putting the actual lease in, which is a great opportunity, because if you did need something, you're just going to call on the warranty. If it was a plumber, you can call a plumber, electrician. You don't really need that middleman that's going to charge you extra. The internet has made the world a very small place. It's still in Canada, so it's easy to kind of self-manage from that aspect. And because they're brand new, it's either warranty or I wouldn't expect very many issues. So for $750, kind of getting a lease in place, whether that be every year or if it was a 5-year lease, rather cheap. But I like that we're overestimating here just to make sure,
Agreed. Yeah, I think it's always good to be conservative there. So we have net operating income. So that's your income minus expenses. Financing costs based on a 3% mortgage. Again, just rough idea here. We're going to talk about the total return in a moment, and you're going to get the whole picture in a second here. So Amy, you can feel free to chime in a second. So we have here our cash on cash return. So you have a 42% annual return. So if we put $100,000 down, which we put 120, that means you get $142,000 back of your money in that year.
Essentially, yes. And that is incredible. So for an investor, we love the idea of leverage. You end up getting way more return on your money. So had you paid cash for a $600,000 property like this, your cash rate or your cap rate is going to come in around 6%. But to truly, take advantage of the opportunity and the cash flow within the mortgage, it's a great opportunity to leverage forward. So when we see something like this, a monthly cash on cash return is coming in at 9.441%. Then we have the mortgage pay down. So secretly, it's like a hidden savings account in your mortgage where they just keep making these mortgage payments on your behalf at 8.21%. And then our gold is really the appreciation. So if you've only paid 20% of a home's value, you're getting a 5% return. So this, assuming that it's appreciating at 5% a year, you're actually getting 5% of the total value of the property, not just your 5%. So that return is coming out equal to 24%. So your total return is, over 42% on your initial investment, which is absolutely insane. And just like Sam said, that's on $100,000, you're returning 142. That's ridiculous. This gives a great opportunity for those people looking to even buy a first-time home in Ontario. They can't save the down payment, etc. It's an opportunity for them to invest their money and double down on their savings account and bring that money back home. Or for those looking to expand a portfolio, there's no debt service ratio factors holding them back. They're able to just continue to expand. So incredible opportunity out here for sure.
Yeah, $960 cash flow as well, which is incredible.
That's definitely a monthly mortgage helper.
Absolutely.
Or life helper.
Incredible. All right, so to grow your portfolio, our final thoughts here. If you'd like to book your complimentary call with us so we can learn more about these opportunities that are going fast, text the word invest to 519-574-3532. And again, because we're continuously seeking new developments and for sustain the demand for current and future investors, please reach out to us for an updated list of properties, projects, and future developments. So text the word invest to 519-574-3532. Anything you'd like to add, Amy?
Nope. We're happy to, take a chance, sit down, profile where you are at currently as an investor or what your goals are as a future investor. And this beautiful opportunity, different prices, different stages of time frame, products, it helps us really be able to design and control, keep the power in your hands for your investment future. It's design your goal. It's
I agree.
Perfect.
Thanks, Amy. Thanks for joining.